Well, tonight on the show, we're joined by Boshoff Grobler. He's head of Ashburton Investments to provide his view on the macroeconomic issues facing the world's financial markets and the potential ramifications these might just have on asset classes and investments. Boshoff, thanks for your time. We were chatting earlier, taper, and the implications for emerging markets. Neither Kevin nor David are of the opinion that we'll see a wildfire sell-off in South Africa specifically. I had a market commentator earlier today who said brace yourself for 25% off emerging markets as a general theme when taper comes to the fore.
So we live this. So we launched our Africa Equity Fund on the 22nd of May, the auspicious date where the taper talk started. So we lived through a very difficult period in equity markets in a very interesting environment. And living through it, we do believe that we're not going to see this massive sell-off. And the reason why we believe we're not going to see this massive sell-off is because there's a growth that will back the QE tapering. And the growth in the US, if it's as robust as they're projecting, around 1.6 this year and 2.6 for next year, you're looking at probably a more gradual, sustained tapering backed by very strong growth out of the US. So if you combine that with the possibility of a stronger than fragile growth prospect in the European regions, then you're actually looking at something that a lot of the emerging markets could sustain. The difficulty with an emerging market with a twin deficit, though, is that you are hamstrung between the moves that you can make within the tapering equation. So it's interesting for places like South Africa, places like India, places like Indonesia and Turkey, as to exactly what it's going to do in the short run. But in the long run, we believe that global growth will sustain what we need to cover.
Boshoff, we've got the synchronized growth story, which everyone is going into the year end with, and they're going to sleep very well and have lovely holidays. But in the new year, we've got the US, okay, it's picking up some traction economically. We've got China, never in doubt, whether it's 7% or 8% or 6.5%. It's still growing at a phenomenal rate. And no doubt in 20 years will be the world's top economy. Japan has been goosed up by RBA and will continue to be goosed up for the next couple of years, I would imagine. You've already alluded to it. Is the Eurozone the one thing we can't rely on, and could it scupper it? Because after all, we are a global economy.
We think that the European recovery is something that will be sustained, although it's quite fragile at the moment. But it's a wild card that will come to the fore. So if the European market comes with stronger growth than that's anticipated at the moment, a 3.5% global growth for 2014 is something that could probably have risk to the upside. If there is risk to the upside, it's going to be very interesting for emerging markets, because the elasticity for demand for emerging market products out of Europe is extremely strong. So we see Europe as a wild card to the upside, and especially as it impacts emerging markets.
So would you, in this environment, in the scenario that you're painting, especially obviously for next year, how do commodity prices feature in that? Is this an environment where you would be looking at value shares or so-called value shares in resources, or is it something where you think commodity prices remain under pressure, maybe fall a little bit?
So our view is that commodity prices will probably remain quite under pressure. We're not very heavily invested in the resources shares at the moment. And we believe in our local funds and also in our global funds that would be the case for 2014.
Boshoff, you have an African fund. Where are you invested in that? Which are the main regions in which you have your investments in this?
So Africa is an interesting place. So we believe that you can't only play Africa with a listed equity fund. But we started there. So we started with a listed equity fund. But in order to provide investors with investment capability into the continent, we are following up with a debt fund and a private equity fund. But just with respect to the listed equity fund, we believe that there's a lot of value currently in the Egyptian market. We believe that there's a lot of value in the Nigerian market. There's a lot of value in the East African and West African equations. So we are invested throughout the market, throughout Africa. But people might think, for example, that one should shy away from places like Nigeria or places like Egypt at the moment. but we believe that there's a lot of value to unlock there. Obviously, in a place like Egypt, it's no use going in there blindfolded. So the approach that we take in a place like Egypt, for example, is to invest in those companies that have very strong growth or export growth in their backlogs, and also those markets that will sustain the infrastructure spend in Africa.
You mentioned earlier, sorry, yes.
Do you find there's sufficient liquidity to actually build a fund?
Mm-hmm.
You know, are you finding that you can actually build the shares and build up sufficient stakes in companies to make the fund attractive?
It's a very interesting question in theory. In practice, on the 22nd of May, it is a very interesting thing, trying to build a...
Well, that's exactly, I wanted to make the point that you launched the fund as the taper talk came to the table. And that has put you up against, I don't want to say a brick wall, but certainly a strong opposition. Have you seen a recovery in the appetite since the taper talk, or are people still very tentative in committing?
It's interesting that Africans are tentative committing, but that offshore players are less tentative committing. They are very clear in their minds as to why they embark into frontier markets, why they embark into emerging markets. And with that asset allocation certainty, they now embark into African equity funds, for example. So we have a lot less hesitancy from US investors, from UK investors, Middle Eastern investors, than we have from South African and African investors.
Boshoff, it's time to be bold, in other words. Be greedy when people are fearful, because you're sitting next to a bloke now who's in his personal life, in his personal capacity, is a risk taker because he supports Arsenal. But when he gets his Raging Bull Award, this is David Shapiro, by the way, he's very conservative. He's got the most boring portfolio you've ever seen in your life, and it's served him well. And he's probably wincing when you say things like Egypt. Is he wrong? Should we be taking on this risk now? Is now the time?
I don't support Arsenal, so I'm less risk inclined. I think the reality is the client centricity of the question as to where value lies. So we ask the question, in what currency do you determine your wealth? So if you determine your wealth in dollars, I think the South African market is quite a difficult place to invest in. If you look at the Aussie in rand terms, we had 19.6% growth in the Aussie index over the past year, but if you look at it in dollar terms, it's 0.5%. So it all depends on in what currency you look at. So if you go into the African market, the currency playing that you're looking at is, if you look at Africa in dollar terms and at the MSCI emerging market, for example, as a benchmark, it's a better equation, because there you're looking at 22% return as opposed to the 42% return. Sorry, the 42% return in dollars and the 22% return in the other currencies.
Also, if you look at frontier markets versus emerging markets, and I know this starts to sound like a technical thing, but are you seeing more interest in frontier markets in the sense that people may feel that the emerging market story's played out, that growth rates are not as robust as they were? You're getting, generally, if you look at Brazil or Russia, growth rates actually been revised lower, whereas you may argue that a country like Nigeria, which is a frontier market, there's a lot more upside. Are you finding that investors are more attracted to frontier markets?
We're finding investors looking for value propositions in core markets where they can follow the economic story. So if you look at Africa, a lot more investors in offshore markets understand that Africa is not just a resource play. They understand that urbanization, they understand that consumerism is making a big impact on what makes the economy grow. So if they can follow the economic rationale, it doesn't really matter if it's a frontier market or emerging market. If you put a stable economic and political environment around it, they probably look at those two types of markets similarly, emerging and frontier markets.
Boshoff, are you seeing any companies emerging that we should be aware of? You know, is there a ShopRite at Aspen coming out of Africa that we should watch out for and perhaps add even to our global portfolios?
Currently, we are in our South African portfolios, we're investing in a few themes. So the one theme that we definitely still going to track forwards for 2014 is a strong consumer in emerging markets. So we've been invested quite heavily in some of those players that can follow that trend. So the Richmonds of the world and the Naspers of the world. So we follow the themes, and then we try to look for those companies that follow through on those themes. So a lot of portfolios in this country are invested in those two. We believe that theme will follow through in 2014.
Are there any African companies that
He wants
that are
tips
emerging?
so that he can get the next raging
You know, I'm
storm.
trying to think, is there a Nigerian equivalent
Help
of
him out,
ShopRite, or
Boshoff.
is there an Egyptian equivalent of MTN? You know, I know the cell phone companies, but we're looking for emerging leaders or emerging leading companies.
I'll give you one of those companies at the Raging Bull Awards.